Thanks for tuning into the video. In this video, we'll be discussing how to give yourself an advantage as a retail investor. First and foremost, it has to be understood that as a retail investor, you have some advantages that the big mutual funds and the big investors don't have. One is by the very nature of your size as a retail investor, you'll have more opportunities available to you to invest your money. And the reason for that is because the size of your portfolio, or the size of our portfolio as small retail investors, is going to be smaller so that we can look at those smaller opportunities basically out there in the market, particular among the micro caps and small caps that those huge investment companies simply have to ignore. So my recommendation, first and foremost, in order to give yourself an advantage as a retail investor, is going to be to focus on the small and micro caps. The second thing is always stick to things that are simple. When we add unnecessary complexity to investment ideas and theses, what happens is we also increase our chances inherently of us making a mistake. Anything that's too complicated and outside of our circle of competence has to simply be ignored. In my opinion, you're much better off and much more likely to succeed in the long term if you stick to things that are simple. Simple companies and simple industries and simple businesses that are simple and easy to understand. So that's the second point to give yourself an advantage. The third thing is going to be concentration. A lot of funds have rules around their concentration levels and like how much they can be in a certain industry or within a certain company. In my opinion, as an investor, as a retail investor, you're unlikely to beat the market if you're too spread out among different ideas. Concentration is key. Having more than 10 or 15 or 20 good ideas is very unlikely when you find huge discrepancies between price and value among the small and micro caps. You have to be willing to put a substantial amount of your net worth into those companies to make the investment worthwhile. In my opinion, if you're putting less than 5% of your liquid net worth in an individual company, you're probably not confident enough in that, and you shouldn't put anything. So if you're going to put money into it, you might as well take a decent sized chunk of your net worth and put it into it. As long as you're confident and you did your due diligence, I think you're doing the right thing by putting a good percentage of your net worth into it, at least 5% of your net worth. The final thing would be to pull the trigger only when you're certain. And this also comes back to the idea of concentration. There's no cold strikes, as they say, in the game of investment. And every day I see things that I think initially look interesting and then I say no to. Whenever I'm looking at a company, I'm always looking at a reason to say I don't know or I don't understand, and therefore I don't proceed any further. My standards, your standards, have to be very high in terms of what you're going to put your money into. They have to be very, very, very high. And there's only going to be, one in 1,000 things, one in 10,000 things even, that you look at that will pass that bar, that screener, that standard that you have. So only pull the trigger when you're certain. If you're not certain, let it go. So in summary, going over these key points again, first and foremost, my advice is to focus on the small and micro cap space. That's where you're going to find the biggest discrepancies between price and value. Simple is better. Stick to simple industries, simple businesses. Concentration is key. Be sure to concentrate your portfolio and only pull the trigger on companies when you're absolutely certain. So if you're going to invest, you got to be confident. If you do these four things, I think you'll give yourself a big advantage over beating, or give yourself a lot higher probability of beating the market compared to if you didn't follow any of this advice. So keep that in mind. Let me know what you think, and be sure to leave a comment down below. Thanks.